Morning, everybody. It's 8:56 on Friday, and we had the all-important monthly jobs number, and they came in at plus 311,000. Um, Not as bad as last week, but still adding a lot of jobs. I don't know how they managed to do it, but they took the unemployment rate up to 3.6 from 3.4. Um, Hourly earnings up 0.2%, which is not too bad. And for the third or fourth month in a row, labor participation was 62.5, and that has been getting better. Um, and as far as the market went, we were down 90 in the Dow, down 13 in the Nasdaq, and down 10 in the S&P. Right now, the S&P is up 10, and the Dow is up about $4. I did see it up as much as $40, and then going back. I mean, there's a lot of give and take here in this market. Um, and as far as I can tell, um, interest rates have come down pretty dramatically. Um, uh, the 2 to 10 was as high yesterday as 113 basis points at the close because of the flight to safety, in view of what has been going on with a couple of those banks. I'll get to that in a second. Got down to 87, currently back up to about 97. So, kind of an interesting mix here. But really, the issue here has been the banks: Silvergate, Silicon Valley, and Signature. They were all down yesterday. Of course, Silvergate being the worst looking, considering that it's down from 160 to $2.84. Um, but Silicon Valley Bank has turned to be more of the issue. The stock has been down really hard, and they have suspended it a little while ago on the fact that it was down so dramatically. I mean, let's remember that just a week and a half ago, this was 348, and got down this morning as low as about 74. Um, when they stopped trading it, it was 78.10, and that was down 180. It had been down as low, I saw it at 50, 50 down 56 or 53%. Um, and when they stopped it, it was actually down 62% at 39.40. I don't know whether they have started to trade it again, but this was a good old fashioned run on the bank, something that most people have never seen. The only reason I'm aware of it is from, being historically involved with the market and studying it and having seen it ages ago. Um, Peter Thiel yesterday told a bunch of their clients, so SIVB is the main startup bank, the main VC bank. And so Peter Thiel coming out and saying, you ought to um, take some of your money out. A lot of people took out half. The FDIC only guarantees up to 250,000. Excuse me, and you have new companies here um, who have tens of millions of dollars in this bank. And while the FDIC does generally step in and make the account holders whole, not so much for the equity players. So the last on that being halted, 39.40 down 66.64 or 63%. So we'll have to see. Signature Bank SBNY 83 and a half down 7 and change. Excuse me. Back to some of the other issues. Orcl with a miss yesterday. Today, not overwhelming. I mean, it closed 86.87, down $1.62 yesterday. This morning, it's 83.10, down 3.77, or 4.3%. Disney is down about $3 from yesterday's action, and Iger has come out and basically said yes, the pricing at the theme parks was a little aggressive. And so now we have the last on Disney after trading down again to 95 and change, 96.28. That's actually up 33 cents. Excuse me. Apple was double downgraded with a target price of 120. Gap stores also a miss. In the last week has gone from 13 to 10.60. Last is 10.76, down 82 cents or 7%. And that's really about it, except for the absurdity of the Biden tax plan. And one more that we looked at yesterday and has really acted well. OCEA, that is Ocean Biomedical. As I mentioned yesterday, they have a new drug for or new treatment with very positive results in a phase 2. Yesterday it was 770 up 3, traded up as high as 1120 yesterday and closed late trading at 975, up 506 for 108%. This morning it's down slightly, down 87 cents at $8.88, and that would be down about 87 cents. So there you have it. Okay, the chart on the screen is our long position in the silver. Bounced off this 20, last is 20.56. The options that we have are in SLV. They are the April 18 and a halves, and SLV is currently trading 18.75, up 31 cents. So those calls are in the money. So I'm kind of pleased with that. All right, folks.